to what analysts had predicted, and that's of course one reason for investors to buy the share today.
Yeah, not a very bad day for the European markets. Let's move on to the core economic data, the manufacturing data called the PMI, the purchasing managers figures. Nice story there from you folks in Germany, including the services numbers. France didn't do bad either. So, talk to us about this measure of business activity within the Eurozone, and what's this big story like today around us?
It's very positive. The manufacturing data, the purchasing managers indices, which are calculated by the magnitude, turned in to be much better than what economists had forecast. That's especially good because yesterday's consumer confidence for the Eurozone came in as a disappointment. But now the hard facts from the purchasing managers look positive. Not only here in Germany, the surprise was particularly big in France, where this purchasing managers index rose to the highest level since May 2011, so a near 6-year high there. Why is this so important? Well, the purchasing managers indices strongly correlate with gross domestic product. They are an important early indicator for what we can expect in terms of economic growth, and that's why all this is pushing the share prices up here in Frankfurt, all over Europe today. The euro did not profit from it. It fell below $1.06 again today. This has to do with inflation expectations and interest rate expectations in the US. Tonight we will get the minutes of the last meeting of the Fed's Open Market Committee, and of course many traders here wonder how much talk of inflation and future interest rates might be in this report.
Okay, thank you very much, Conrad. Let's spend some time tomorrow to look at the FOMC minutes and, of course, part of what we can bring in from the Bank of England, Mark Carney. Thank you very much for today. We need to move on. We got a major breaking news from Nigeria here. We need to take that very quickly. Thank you very much, Conrad Busen from the Frankfurt Stock Exchange on behalf of Channels Television. This is what is coming through into the newsroom, Channels Television newsroom as we speak. Don't expect Nigeria's President Muhammadu Buhari back from the UK anytime soon. That's according to the presidency. Today, in an update on the President Buhari's health, the presidency wrote to Nigerians in a press statement that the president says he may be staying longer than expected. The statement says, quote, President Buhari wishes to reassure Nigerians that there is no cause for worry. During his normal annual checkup, tests showed he needed a longer period of rest, necessitating the president staying longer than originally planned, end of quote. The president, however, thanks millions of Nigerians who have been sending good wishes and praying for his health and well-being in mosques and churches throughout the country. The president left the country last month on an annual leave on a medical vacation, which he wrote the National Assembly on his intentions to extend. It's now about 32 days since he left Nigeria. That's according to the media advisor, Mr. Femi Adesina. That's the latest on Nigeria's president, and we'll keep an eye on that from our newsroom with Channels Television here, Nigeria's news leader. One news that came in the last 24 hours was the Central Bank of Nigeria easing the foreign exchange market with a set of new regulations that are expected to get the retail transaction market up and running. And you heard earlier on the program, Nigerian Naira now slightly better than yesterday's at the black market, what you call the street market. The Naira now selling 513 to the US dollar against 526, where the market finished off on Monday. That's news we're trying to fix into the local commodities market. Let's get a sense of this further from financial derivatives company. We're bringing via Skype into the conversation Nwanebuke Ojude, who's a research analyst, to talk us through this and all this. Apart is keeping the phones buzzing as we speak in this very important morning after. Good afternoon. Thanks for coming through to us.
Good afternoon.
Thank you. Now, how do you see this latest move by the central bank impacting on domestic prices of goods?
Okay, so far, the CBN's action so far has been laudable. We have seen the fact that the less restriction, the 60-40 rule, which was initially adopted, will cease to be, and the fact that CBN intends to use more of commercial banks in its activities. For certain items was left out, which is the 41%, 41 banned items. Those items include rice, palm oil, and the likes. So we expect, we envisage the fact that in the commodity market, it will help in terms of exchange rates. If increased availability of dollars is available to the market, and then the market perceives CBN to be consistent with its action, we expect that there will be little divergence before convergence of exchange rate, which will help local commodities, domestic commodities in Nigeria.
I'm sure this is going to take a couple of days for you research analysts to put the numbers together. In the meantime, this looks like a short to medium term positive for domestic prices of consumer goods. Yes or no?
For now, in the short term, yes, in the sense that consumers, which will entail people buying school fees, will buy it at a cheaper rate. So there will be less resistance for them to buy other commodities in the market. And if other one would be the fact that the commodity prices, if it tapers down, the commodity, if the exchange rate divergence or the spread in it tapers down, we expect that those things will trickle into the commodity prices of commodities such as rice, garri, and coal.
Okay, thank you very much for your time today. I'm winning on this conversation. It's just about 24 hours since we got that announcement. Thank you, Nwabuide Ojiude from Financial Derivatives Company, one of the research analysts. Let's remind you what is just coming through to our newsroom. Nigeria's President Muhammadu Buhari may likely stay much longer in the UK than expected. It's just written, and it says, today on an update, the presidency says that this president may be staying longer than expected. He wishes to reassure Nigerians that there is no cause for worry. During his normal annual checkup, tests, according to the press statement, showed the president needed a longer period of rest, necessitating the president staying longer than originally planned, end of quote. The president, however, thanked millions of Nigerians who have been praying and sending good messages for his health and well-being in mosques and churches throughout the country. And finally, before we go on break, South Africa's competition watchdog has granted Barclays Africa conditional immunity from prosecution in return for its continuing cooperation in the rand currency rigging probe that has roped in Citibank with 71 million rands in fine. We'll be back in 2.